Thank you so much. Thank you very much for the introduction. It's a pleasure. Thank you, everyone, for having us here. My name's Max. I have the pleasure to open up this presentation today. And as already pointed out, I'm not going to bore you with any taxation questions, but really the question of how increasing financial transparency requirements around the globe can also be leveraged for financial crime investigations and law enforcement purposes. Because we are entering a new stage of investigations. This is also the name of our presentation, which is Bridging the Gap Between On- and Off-Chain Data for Effective Crypto Investigations. Quickly handing over to Kobe also. Do you want to say a couple of words?
Yeah, I mean, very, very happy to be here. I have been at Taxbit all of 1 week, so this is exciting for me to be back in the public sector again after having been in the public sector previously for about 7 years. Very exciting time to speak to you about this because I think the coming years are going to change the way that many governments and law enforcement agencies look at crypto investigations, especially off-chain data. And we're going to talk more about that today.
Exactly, and that's a quick agenda. What are we looking at? The significance of off-chain data in crypto asset investigations, then talk quickly about the OECD's crypto asset reporting framework, which is also in line with the amendments to the CRS and FATCA that some of you might know from the traditional banking space. And then also the data complexity and key challenges that goes hand in hand with all of these off-chain information sets that are now being received, but not, of course, only through these institutional reporting requirements, but also through information requests, subpoenas, bulk data set information requests to crypto exchanges, as in investigations today. And then ultimately also like what we are doing actually at Taxbit in order to help administrations deal with this issue. So let me quickly start with the significance of off-chain data. So when we talk about off-chain data, what we really talk about is transaction ledgers of exchanges. So the internal things that happen on crypto platforms. I mean, each and every one of you that does active investigations knows how does it work. You have an on-chain data lead that basically you follow, then at some point a transaction hits an exchange. Maybe Binance, maybe Coinbase, maybe Kraken, etc. Right? You then need to send an information request to that exchange. What happens next? The exchange provides you with a CSV or Excel, which is often like hundreds of thousands of rows or even millions of rows. And as we all know, Excel caps out at 1 million rows. And one of the biggest issues that we see in active investigations then, it's provided in different formats. So even if you subpoena information, if you send an information request to an exchange 2 weeks in a row, like the data sets that you would receive are in different formats. Like there's no standardized way. And actually in active investigations, in most jurisdictions, there's not even a way you would can actually tell the service provider to provide you the information with. Right? One of the biggest struggles we see in the active investigations as of today. And this is not necessarily because the crypto asset service provider does not want to comply. But it's also often just limitations on their end where the people that get subpoenaed or that receive the information request don't even have access to the internal database to get a comprehensive data set. And then ultimately, also something that is very, very important for this off-chain data piece is now the institutional information reporting requirements that will kick in. So up until now, every time you would get such a CSV or Excel sheet from the exchange actually about individuals, you would need to do a set in active investigation work. So it's up to the authority to actually request information from a service provider. And this is because under AML rules, mostly you would need to have a reason why you would subpoena this information, right? However, now that we talk about the OECD and their tax transparency framework, this burden is reversed. And actually, the service providers will need to provide you with certain data, and we're going to elaborate a bit more what data this actually is, to the government, and they will receive a lot of data. So first, why off-chain matters in investigations. I already mentioned a short brief case of, okay, how does a criminal actually launder money, right? So basically you get a credit card or you go via a bank, you do the fiat and on and off ramp on an exchange, on a VASP, and then you have transactions. There should be more errors in this. Okay, now they're here. So basically, it's really where you go from one VASP and then you either transfer to a self-custody wallet or you have inter-VASP transfers, right? So what we are seeing as of today is you then can either like cash out at the end of the day, so to say, if you buy like a luxury good, or you just do the on and off ramp against fiat again. And how it works in the actual investigation workflow, right, is you get an on-chain lead, you follow something, you see that a transaction is hitting an exchange, and then criminals usually also use these exchanges the same way they would use, for example, mixing service on-chain. So they have multiple accounts on the exchanges. They trade through trading bots, thousands, tens of thousands, hundreds of thousands, millions of transactions on the exchanges. That's Kobe, please.
Yeah. And before we move off this one, I mean, the other reason to think about why off-chain data is important from a more global perspective is we think about the overall volumes of trading that actually occur in off-chain versus on-chain. So globally, we're looking at 80 to 90% of trading volumes that are occurring in off-chain. So that's, you look at the slide, we're talking about the vast off-chain transactions. That's where the majority of that trading activity is occurring. And what's also crucial for law enforcement agencies is these are the entities that law enforcement agencies can interact with because they have the AML KYC information. They have the obligation to respond to you for your requests, and they know who their customers are. So these are obviously crucial partners in any kind of investigation. And without the information that these entities have, it's very, very difficult to actually trace the money from start to finish and identify who is actually cashing out, like Max said. With that, we're going to turn to the point that you have all been waiting for, which is where you ask yourselves right before lunch, why is this person talking to me about taxes? This is a financial crime conference. What are you doing here with a tax standard? And I'm going to tell you, well, basically, tax standards are really important for investigations because we have a long-running history now of international information exchange frameworks that work in the traditional financial space. So this is automatic exchange of information, where basically every year offshore account information is exchanged between jurisdictions based on jurisdictions of residence of the taxpayers. Most recently, we've had over $12 trillion worth of accounts that are exchanged annually. And this has actually led to a huge increase in the amount of investigations that are generated. So you see here the bottom line is actually over the past several years, how many investigations continue to be generated off of this. It continues to go up. But this is only in relation to TradFi, traditional financial space, money, right? And that is something that I think is useful. But what we're going to talk about today is the crypto asset reporting framework. Because I think this is going to be very, very transformative for investigations and how we look at off-chain data. So why does this exist? Why am I talking to you about this? I mean, basically, like I said, there's existing transparency frameworks that have been out there that have been proven, that are successful. The problem is that the OECD, the G20, international community, they realized that they don't cover crypto assets, and that crypto assets was this huge hole in international understanding and information reporting. And that given the fact that crypto assets are basically borderless, it's very easy to move your money across borders. It's important to have some sort of framework to make sure that that information is available to everybody. So what does the CARF require? Basically, it requires information reporting from crypto asset service providers, which are basically the same thing as VASPs, of a taxpayer to understand where that taxpayer has been carrying out transactions. So basically, like a very clear example. So Max here, he's an Austrian tax resident. And then maybe let's say that he decides to start trading crypto.
And I pay a lot of taxes.
And he pays a lot of tax. He pays all his taxes, very compliant. But he trades all his crypto. And then he maybe throughout trading crypto, he finds some really interesting exchanges in, let's just say, Singapore and the UAE and Brazil. And I mention these countries because they are committed to doing CARF and they're going to be exchanging this information, right? So he's been trading on these exchanges for a year. And at the end of the year, what's going to happen is those exchanges have to collect his identification information, so his AML KYC information, his tax residency, and then they have to aggregate all of his transactions by type, including transfers in and out of the exchange. And they have to report that back to Austria, who's going to get all that information about Max.
And every single asset as well.
Every single asset.
This is very, very important as well. So every single asset that I trade on these exchanges will then also get reported in this file that is submitted to that local tax administration. So if I use a Brazilian CASP, this they will report to Receita Federal, so the Ministry of Finance in Brazil, the financial administration, that then sends it through the common transmission system here to Austria, and they can use it for investigation purposes.
Exactly. So one thing is this is a very successful global multilateral topic. So here we already have this number is already out of date. It's actually 70 countries that have signed up to do this. And what I think is really crucial to note is that these requirements are coming extremely soon. So all of the countries in light blue will start these requirements going live for the exchanges January 1, 2026. So in about 2 months' time from now. That means as of that day, the exchanges will need to be collecting all of this, make sure that they have all this AML KYC information on for all of their clients, and start collecting this aggregate transaction information for all the information. So very important. So we've kind of covered basically what is included in the CARF. As we mentioned, it's very, very crucial information basically for understanding what Max is doing in all these exchanges around the world every year, that of course he's paying taxes on everything about, but it's very crucial information that also has a very significant role to play in traditional financial investigations and law enforcement agencies. So with that, why do we see this being useful for these investigations? Basically, what you're doing is you're increasing the amount of data that governments are going to have on hand to be able to make assessments, to identify risk, and to make different types of analysis calculations. One of the things is that, like I said, we've already seen in traditional financial space, automatic exchange of information has led to significant growths in the amount of investigations that are spurred. And I think in crypto, just because the fact that it is so cross-border, that will be even more so. And then basically here, what we've got is, I think that the next questions about this are sort of, what are the implications of this, right? So it's a great opportunity for governments, for tax authorities, for law enforcement, but how do you actually operationalize this data and make use of this data and turn it into successful win stories for your administration? And that's what Max is going to tell you right now.
Yes, and actually also like think about an investigation that you have ongoing and about an individual suddenly popping up in this information reporting schema, and you see like this individual probably has used a couple of other exchanges as well that have not been previously known. So this creates a completely new level of transparency in the off-chain data space. So basically the internal transaction ledgers of exchanges, what assets this individual use, how many transactions, what values they transferred. So this is going to be a game changer. However, what is the problem with this framework? Of course, it's not perfect. It's going to be aggregated amount reporting. So the service providers at the end of the day won't send you a bulk data set with each and every transaction of the individuals, right? You get aggregated amounts. You know how much this individual has been traded. So basically what we are seeing is that this will also, of course, uncover a lot of, in many countries, tax non-compliance, for example. I mean, how was Al Capone caught at the end of the day? Tax non-compliance, right? Because it's a very, very simple way to get an asset seizure, for example. Because for tax, you either have black or white, the person declared or not. So asset seizure is going to be triggered by that a lot as well. And what are the problems that we now see in the investigation workflows is really... I'm going to skip this slide, actually. It's then the insane amount of data that comes in, right? You have different numbers of data sources because you suddenly receive, imagine right now in an investigation workflow, you subpoena information, you get an information request from an exchange, you get it from 3 different sources already. Now through this information reporting schema, you might get it from 10, 20, 30 different exchanges. You will have to deal with a completely new level of off-chain data transaction volumes. So basically, again, often criminals use exchanges the way they would use mixing services on-chain. So you get like hundreds of thousands, millions of transactions. You have the asset variety there as well, because as every one of you know, on exchanges, you can trade hundreds, if not thousands of assets often, which allows you to also swap between assets where you probably don't even have a fair market value. Then you have inter-source movements. You have transfer between accounts on these exchanges. You have transfers between accounts of multiple VASPs and inter-account movements. How do these reconcile and actually belong together? You have multi-person workflows. It's often organized groups that operate as a bunch, and basically you have multiple accounts that would transfer between each other. And at the end of the day, data gaps. I mean, what we have seen also in active investigations is often that you would send an information request to an exchange and they would provide you with a data set, right? And then you as an investigator would sit there and say, probably there are some gaps because it doesn't look like it's complete. And then you go back to the exchange and they say, no, we provide you with all the data. Can you please point us what you actually want? So you need to identify the data gap. You will need to see, okay, what data is missing. And then you go back to the exchange and they're like, yeah, sorry, we didn't have this. And this is not because the exchanges or crypto asset service providers on average would say, oh, we don't want to collaborate, but it's also because their compliance departments, they don't have the resources, they don't have the access to all the data that would be required under, for example, a subpoena information request. So it's not always bad intent when they don't share all the data, but it's basically, it will also be a lot of work on the authorities to actually ensure they have complete data sets. And this is something that we do as of today with the authorities that we work with together, is basically a SaaS solution called the Data Aggregation, Reconciliation, and Tracking Solution, where we help investigation authorities to actually merge merge on and off-chain data, so bridge the gap between on and off-chain data, meaning standardization and harmonization of off-chain data sets. So if you receive disparate from disparate sources, different data formats following an information request, we harmonize this data, ingest it, and basically merge all of these transactions across multiple sources and help you to streamline the process and tackle all the challenges I was just highlighting, right? And this is, at the end of the day, also something that is extremely important for court cases, because what we are seeing today is for proving a case, for example, of money laundering, you would need to prove where did illicit funds start and where did they end, right? It's an end-to-end process. And basically matching all of these transactions and follow the money, so to say, is what we at Taxbit have really started off for tax investigations, and what we have now really also ventured into more the financial crime, law enforcement, and police investigations. To make it very simple, input, off-chain data, on-chain data, financial data, get it all together and get it out.